Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 8th of March, 2017. Hope you had a good week. Here's a look at the ES front month futures contract. This is the daily chart of the broad S&P market in futures form. You can see that we have drifted lower here now for 5 days straight. Basically, we had the bounce on the president's address to Congress, gap up, and then we've been selling off ever since. And the 5 days prior to that, we were dead flat, and we're right back now to where that was, but we're cracking the 10-day moving average for the first time since January, really, and even then we didn't dip much below it, so let's keep an eye on that. Let's take a look at the major indices. We'll look at the intraday action. I was gone yesterday on Tuesday, so did not do a recording Monday night. We'll kind of get caught up on some stuff here. Crude oil closes at 52.80. That's down 35 cents from Monday. Gold up $1.40 after selling off on Monday. Not a big deal. S&P ended up closing down $6.92 on the session. Nasdaq 100 loses 9 points for the session. SOX actually gained 2, which is a blip for the SOX. Biotech's down 48. That's a pretty big drop for the bios. VIX up 21 cents to 11.45. No urgency in the market at all. Trend closed at 1.52, another big close. That brings the 10-day moving average back up to 1.19. Nasdaq volume 1.6 billion shares. Pretty weak. Advanced decline ratio on the Nasdaq very negative for 2 days in a row. Negative 857. That means 857 more stocks down than up on Tuesday. It was actually negative 1,200 on Monday. Advanced decline on the New York side, negative 1158, right around there on Monday as well. Google actually gained $3.88 on Tuesday. Apple was up 18 cents, been dead flat for 5 days. Amazon down 59, also fairly flat. Netflix down 51 cents. Tesla loses $2.62, trapped under the 10 EMA. The 20-year bonds have sold off. This is what's scary. Bonds are back near lows again. And notice the floating island last week. The 3 days we gapped up, the 3 days sideways, gapped down. And boy, if we crack lows on bonds, that is just not good. Dow Jones down 29 points, but who really cares? Goldman Sachs back down another $1.11. Still has not confirmed a break of that risk line, so we're still operating under the 13 sell signal on Goldman Sachs that we got a little while back. Here's a look at the 5-minute chart of the ES, so you can see back to Friday, into Friday's data. So Monday we had gapped down, pretty flat morning, tried to drift higher after lunch, still didn't fill the gap. Tuesday we gapped down, lower initially, then back up, just missed filling that gap, and then really flat, ended up right about where we started by the end of the session. Nasdaq side, only difference here is that, so you gapped down Monday, curled, came up, but didn't fill the gap. Tuesday, the gap down, the head lower, and then here we came up and we filled both gaps because the high of the day fills the gap from Monday's open as well. A little more volatility, it seems, on the Nasdaq. Sold off late in the market there. All right, so what do we have for economic data for Wednesday? Don't forget we have the time change coming up this weekend. On Wednesday, we've got MBA mortgage index at 7 a.m. Eastern time, ADP employment change at 8:15, revised productivity and unit labor costs at 8:30, wholesale inventories at 10, and crude oil inventories at 10:30. We still have plenty of data left this week, including the non-farm payrolls and the unemployment rate on Friday. So be prepared for that. Hopefully get some excitement out of some of this. And that's it. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of 2 trading weeks at a minimum. And everybody have a great trading